Hello, everyone, and welcome to Thursday morning. It's Stephen Whiteside here from theuptrend.com. In the pre-market this morning, things are mixed. We've got stock index futures pointing lower. A lot of that has to do with Tesla, which is down $17 in the pre-market this morning. On the other hand, we've got gold up $60, crude oil up $3, and Bitcoin up about $900 in the pre-market on Thursday morning. So a rather mixed picture. Now, the stock market is still range bound, and if we go back a couple of weeks, we made new highs. If we go back 2 weeks, we made a new low for this particular move, and we're still within that range. So we're looking at the Vanguard Total Market ETF. You can look at the Dow Diamonds, the SPY, or the Triple Qs for the NASDAQ. They're all trading within the range that we set a couple of weeks ago. That's also true for the TSX, which has come down to the bottom of the range. So last week, we retested the low of the range. This week, we're retesting the high of the range in the U.S. In Canada, we're down at the bottom of the range, whether you're looking at the iShares for the TSX 60 or for the Vanguard Canada ETF. So in both cases, we're waiting for the markets to break out of these ranges. I don't know what it's going to take to do that, but right now the markets are really treading water when you look at the market on a short-term basis. Of course, on Friday morning, we will print off some weekly charts and just to see if we're still stuck in these ranges going into the weekend. Now, looking at the world of cryptocurrencies, Bitcoin turned down yesterday. It is up in the pre-market this morning. We're still trying to hold 106,250. If that breaks, then moving down to $100,000 would be our next target to the downside. And of course, that has massive psychological support. Now, we did see some of the crypto stocks roll over yesterday and join some of the other ones already on sell signals. So we've got Bitfarms on both sides of the border back on a sell signal. We've got Bit Digital back on a sell signal. We've got Galaxy. We've got Hut 8 on both sides of the border, down sharply on Wednesday. Then we've got Mara Holdings back on a sell signal, joining Strategy already on a sell signal, making a new closing low for this move. Hard to believe, a couple of months ago, the stock was $460, and yesterday it closed at $280. Moving on to the world of commodities, we saw a pop in crude oil on Wednesday. It is back on a buy signal. It is shooting higher this morning in the pre-market, up another $3 for the futures contract. And with crude oil moving higher, we have gasoline also moving higher, and it's up again in the pre-market this morning. Natural gas still on a buy signal, no change there. So that put a bit into energy stocks yesterday on the TSX. It traded up to the lower channel line. The big winner on the TSX 60 was Imperial Oil, and it is sitting right on the edge of a new daily buy signal. In the U.S., we've got the ETF back on a buy signal, and the big winner yesterday was Halliburton, which has been on a tear for the past couple of days. Looking at the world of metals, copper still trading water here on a sell signal. Copper miners made a new low for this move yesterday. We saw the GLD and price of gold and gold stocks recover off intraday lows yesterday. And so there we saw the GDX trade down to $70 and bounce. We saw the Newmont come down, make a new low for this move before recovering, closing up 69 cents on the day. Then looking at the junior gold miners, they also bounced off an intraday low. Then looking at the XGD, again, we're big reversal midday yesterday, and we actually closed up just a couple of cents, but still closed higher on the day. Kinross was the big winner on the TSX, and it was up nearly 2% on the day after making a new intraday low. Let me finish off with just a couple of comments. I saw this article on Barron's, and this is from the 20th, and margin debt has soared. It's a warning sign for the market. So this is just one of the many indicators that are incredibly overbought at the moment and are at all-time extremes. Now, what's funny, though, is this was written on the 20th in Barron's. Then on the 22nd, we get another story why the stock market's bubble could last for years. So one story contradicts the other. But if we go back to the margin debt, that's what it looks like right now. So you can see margin debt spiked just before the dot-com bubble, just before the big banking real estate bubble in 2008. And so we're expecting the market to pop at some point and move down sharply, but it certainly hasn't started again on Thursday morning. But this is just one of the many indicators that are at all-time extremes. Okay, folks, that is all for this morning's presentation. So far, it looks like we're going to see some selling in New York and probably some buying in Toronto with commodity prices moving up on Thursday morning. Have a great day. Next time you'll hear my voice is on Friday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theyuptrend.com.